Hello, welcome. This lesson would be in English, so other viewers, international viewer can also watch this. How Python can use in technical analysis, how the Python can use in different type of strategies, trading strategies. So mostly it's not basic Python learning programs. So it's a little bit going to diving into the strategies, backtesting strategy using simple moving average. So the concept is here, we will buy the stock or index when it's above the simple moving average. Now simple moving average is 50 days, 40 days, 30 days, 200s, hundreds. Is depend upon the instruments or depend upon the your choice, long-term goals. But I started with 50 here, then I optimized 40, then about 60, then 65, then 670, then I found this 63 is giving a slightly edge over the buy and hold strategy. So strategy is not just comparing the returns, it's also comparing the win and loss ratios. What is the drawdown, maximum drawdown? All these thing parametering trading analysis. We will calculate these parameters in later on videos, advanced videos. It is just starting using the simple moving average. Then we move to exponential moving average, super trend, and combines these two strategies. How to optimize the data, which rolling window you have to optimize this for a Windows period. 63 is when we switch to 61, the return will drastically decrease. When 65, the return will drastically increase. So that window period is not suitable for. We need a stable window for rolling window periods. So that will be discussed in later on videos. Right? So this is just how to generate the signal, how to calculate the returns, cumulative returns, and compare the buy and hold. These three concepts are here. So we will here upload the data in data frame using the Excel okay, so data is loaded. So we keep the close, we don't need open or high or low, we take only close. So next we calculate the simple moving average, 60-day moving average. So let's start discuss this. Run selection, yeah. Okay, so we have this one NA, then we have drop NA, then we again if we run this, then we will see the very clean data. Now we have simple moving at 50 column and nice and clean data. Now next important thing is generate the signal. We are adding the column here SMA bull signals. If you don't know how to add the columns, I have a tutorial in other language which can how to add a column in data frames and by different methods. Link will be above the video, so you can watch that. So we are using the numpy array. So we have generating the condition when close is greater than 50, then we add 1, otherwise it has 0. So this will be signal generation. Now return calculation here is the another column. So we will calculate the percentage change, which is return, using this library, using these functions, and shift 1. We are calculating, we are not taking the position today. If cross signals happen today, we will not take the position today. We will shifting the position here. We will take the tomorrow position. So not today. So we will shift this signal, this one, as a 1 and multiply by the percentage change. Now this will generate the strategy returns. Next is we have cumulative product of the strategy. So we also calculate the cumulative product, that is a 1 plus here plus this one column into cumulative product. So why we add here 1? We need to see how $1 or 1 rupees or one currency, whatever you trading, how is growing with respect to cumulative products, is the cumulative returns. Next we access the last row of this cumulative, means how much strategy this one give the return. The last column of this, last row of this column is accessed, and -1 give you a return, how much strategy is earning here. So then we print that into 2, it will convert into percentage, 0.2 dot percentage. Let's run this code first of all, see how it's work. Yes, this is 177.81% in 10-year Nifty returns, that is the index returns. So I hope you understand we have generating the signal here. When it buy, then we calculating the percentage. When we have positive signal, what is a percentage? Then we use a cumulative percentage. We are calculating the cumulative returns, just multiplying the above return here, this one columns. And we have print out, we had taking the excess of the last row, and -1 give the simple fraction return has 0.177, something like that, which means we understand how 1 rupees, how $1 is growing here. Then we print out that. Now if we do know nothing here, we just calculate the percentage change. No signal here generated. Just calculate the cumulative products of all closing basis of returns. Then we take a last row, and how much signal is generated. Let's see how much return is generating here. This 174 is slightly less, but here you have to careful about when you have drop NA, we are dropping the 50 days of buy and hold calculation. You can use another data frame for this, or you can use same, it depends upon you. If you use same data frame, then you losing 50 days for buy and hold returns, right? So now you want to plot these returns, these columns, how it looks. Yeah, this one, we click on plot here, this one is the plot you see. Try here. Yeah, so this one is the buy and hold. You see here exit the signals, this strategy. So this period you can put in debt fund or something like in FD or something like that. After that you buy here. This is a pure technical based, it's a just basic strategy. So it will grow and you has cumulative again and again and again. Last is here, the index is dropping, but you are not dropping too much. Your portfolio values are not dropping too much. So it's a slightly better, you can say, but not too much, because after all this is a simple moving average, not any technical, not exponential moving average. The idea is here to how to generate the signal, how to compute the cumulative product, and shift is important here. We are generating the signal and multiply the percentages just for next day. So shift 1 is important for this calculation. and excess return is here, and growth curve for this one is here. So this column is represent the growth of this currency or you can use whatever you want here. That will be a little bit advanced when you put 1,000 rupees or 1 lakh rupees in this scenario. So this is a basic idea. We will buy when the simple moving average uh, is calculated. We will buy when the price is above the simple moving average. So I hope this tutorial will be clear how these strategies, how technical indicators can help to trade, and we have to back test this simple moving average. So this is also back testing the indicators in Python. So and we will not judge only strategy on the basis of return. This is a not final conclusion. We also see drop down percentage win and loss, where what is a trade book analysis. We will how many trade this happen shoot, what is a transaction cost of this cost, that will also included later on videos. I hope you will like this type of the strategy, just signal generation and cumulative product. Please like and subscribe. We will also introduce you more and more complex strategy in Python and how you benefit in backtesting and you will apply for the future. So will this lesson, this YouTube channel will be describing more and more depth for decision making in your tradings. Please like and subscribe. Thank you.